Good morning, students. Today we will see how to convert a receipts and payment account into income and expenditure account. This is the format for the income and expenditure account. All the expenditures are recorded in the debit side and all the incomes are recorded in the credit side. But while preparing income and expenditure account, we must know that only current year's items are recorded here in this account and only revenue items are recorded in this. Let's see one example. This is the receipts and payment account we are given here. All the receipts are given in the debit and all the payments are given in the credit. While preparing income and expenditure account, we do not transfer the opening and the closing cash balance in the income and expenditure account. Then all the capital items are also ignored. So fixed deposit, books, furniture will not be transferred to the income and expenditure account. Likewise, government grants cannot be transferred. Then we are given here the sale of fixed assets like furniture. Only the profit or the loss on it can be transferred to the income and expenditure account, as the income and expenditure account is a nominal account. Last year's amount of subscription and the next year's amount of subscription will also not be transferred. So let's see how will it be prepared. This is what I explained you in the previous slide. Which items will not be transferred to the income and expenditure account. Fixed deposit, books, furniture and opening and closing cash balance, they are the assets. That's why that will not be transferred. Only current year's items are shown in the income and expenditure account. Subscription for last year and next year will not be shown here. Government grant is assumed to be a capital, that's why it will be shown in the balance sheet. Loss on sale of furniture, that is 1300 rupee, which will be transferred to the income and expenditure account. Let's see how will it be prepared. You can see salary, rent, newspaper, electricity charges we have recorded in the debit side. Subscription, newspapers and interest on fixed deposit, that will be transferred to the credit side. Now we are given here the loss on sale of furniture. The book value of the asset was 7,000 and we sold it for 5,700. So there is a loss of rupees 1,300. Only the gain or the loss are transferred to the income and expenditure account. Now to calculate the surplus or the deficit, we'll have to make the total of credit side and the total of debit side. Then total of the credit side and debit side will be compared and the surplus or the deficit is found out. When the total of the credit side is more, there will be a surplus. So here you can see that the total of the credit side is 28,200, whereas the total of the debit side is 14,150. So surplus will be recorded in the debit side. Surplus is also known as excess of income over expenditure. Let's see the same kind of question with adjustments. If we are given the adjustments along with the question, then the adjustments are also included. You can see here the fixed deposit is given with a date as well as the percentage. So we'll have to calculate the amount of interest also. Here the same opening and closing cash balance will not be transferred. Furniture, books, fixed deposit, that will not be transferred to the income and expenditure account. Government grants, that will not be transferred. We are given sale of furniture, but we have to include only the gain or the loss on sale of fixed asset. Outstanding subscription. Outstanding subscription for the current year we are given here as rupees 1700. This will be added to the current year's subscription. Then we are given outstanding salary. Outstanding salary we are given 600 rupees. 600 rupees salary will be added to the salary account. Then we are given the rent is outstanding rupees 1200. So it will be added to the rent account rupees 1200. Then we are given prepare income and expenditure account and find out the opening capital fund. Let's see how will it be recorded. That is what I have explained you in the previous slide. The items which will be included and the items which will be excluded. You can see here that certain items are marked as cross, that will not be recorded. Only the profits or the losses are transferred to the income and expenditure account. Here the explanation is also given. Let's see how to solve this question. All the expenditures are recorded in the debit side, whereas all the incomes are recorded in the credit side. We are given here salary and outstanding salary is also given. So the outstanding salary will also be added here. Then we are given rent rupees 6,800 rupees, and along with the outstanding rent that will be added. The newspaper, electricity charges, they are the expenses. Then loss on sale of furniture. We are given here that the book value of the furniture is 7,000 rupees, whereas we have sold it for 5,700. So loss will be transferred to the income and expenditure account. Subscription we are given 26,500 rupees, and outstanding subscription is still given 1,700 rupees. We have to still receive this amount, so 28,200. Then we are given here the sale of newspaper, that is a receipt, income. Now we are given here the income, interest on FD, fixed deposit. We are given in this particular question the investment with a date. You can see here that fixed deposit is given with a date as well as the rate of interest. You can see that 20,000 rupee is the total amount of investment. Then 10% we have to calculate for 6 months because we invested the money on 1st October. If you calculate the total amount of interest, it will be 1,000 rupees, whereas we have received only 500 rupees. So 1,000 minus 500, that 500 rupee will be considered as accrued interest on FD. Now we have to make the total of both the sides to find out the amount of surplus. If the income is more than the expenditure, it is considered as surplus. Surplus means excess of income over expenditure. Now we have to calculate here the capital fund. Capital fund is calculated by adding all the assets and deducting all the liabilities. All the opening assets are added here, like cash, subscription, outstanding at the beginning of the year, then furniture and books. All the assets at the beginning are added, and then all the liabilities. There is no liability given in this particular question. So the sum total of all the assets will be considered as the capital fund at the beginning. Thank you, students.